Hello everyone. Welcome back. Today, we've got some crucial news you don't want to miss. Let's dive right into the top financial headlines and break down what's happening. There are 4 key updates worth noting today, especially as both the US and global markets remain volatile. To truly understand the current landscape, it's essential to grasp these details, otherwise, it's easy to feel lost in the noise. 1. US GDP growth beats expectations. This morning, the Bureau of Economic Analysis released its third revision for Q3 GDP, and the numbers came in stronger than previously thought. The economy expanded at an impressive 3.1% annual rate, up from the earlier estimate of 2.8%. So, what's driving this growth? Officials point to 2 main factors: robust consumer spending and stronger than expected exports. In fact, consumer spending jumped by 3.7% in Q3, the fastest pace we've seen since early 2023. Strong economic growth like this generally adds a positive tone to the markets, even amidst the current uncertainty. 2. Jobless claims remain low. The Labor Department reported that initial unemployment claims fell by 22,000 last week, with 220,000 people filing for benefits. This level is still relatively low and typical of what we'd see in a normal year. In other words, the labor market is holding steady, neither significantly improving nor deteriorating. 3. Mortgage rates and housing market oddities. Here's a surprising twist: 30-year mortgage rates have climbed to their highest level since late November, reaching 6.72%, even though the Federal Reserve recently cut interest rates by 25 basis points. At the same time, November saw the largest annual increase in home sales since 2021. Why the mismatch? The National Association of Realtors explains that many first-time buyers can't afford to wait any longer due to job relocations or family needs, even with rates this high. For those hoping for a drop in housing prices, this trend might feel frustrating. But for many, it's simply a case of buy now, worry about the debt later. 4. The Fed's hawkish rate cut and market reactions. Yesterday's rate cut by the Federal Reserve wasn't the relief the markets were hoping for. Instead of rallying, investors were left rattled. Why? 2 main reasons. First, the market had already priced in the 25 basis point cut, so it didn't feel like new good news. Second, Fed Chair Jerome Powell signaled that rate cuts in 2025 would likely be limited to just 2, setting the market's expectations at the lower end. This means the Fed's benchmark rate could still sit above 4% by the end of next year, keeping borrowing costs relatively high. That's a disappointment for Wall Street, which had been banking on more aggressive rate reductions. The Wall Street Journal's Nick Timmy Rouse, often dubbed the Fed Whisperer, addressed this in his latest piece, calling Wall Street's reaction overblown. He reminded readers that a 4% plus benchmark rate is actually normal outside of crises like the 2008 financial meltdown or the COVID-19 pandemic. He also explained that the Fed's current goal is to align with a neutral rate, one that neither stimulates nor suppresses the economy. While that neutral rate is expected to decline as inflation stabilizes, it won't happen overnight. So, while the Fed has room to cut rates further, it's clear that Wall Street might need to adjust its expectations. Understanding these dynamics can help make sense of the market's recent turbulence and where things might head next. Next, let's talk about one of the biggest stories making headlines today, something that's both a political and financial bombshell in the US. Yesterday's massive market drop, with the Dow falling over 1,000 points, wasn't just about Powell's so-called hawkish rate cut. In fact, that wasn't even the main driver. The real issue? A brewing crisis in Washington as the government faces another potential shutdown. So, what triggered this chaos? According to Bloomberg, it's all about Trump and Musk stirring the pot and throwing Congress into disarray. Here's what happened. Congressional leaders had reached a bipartisan deal, a plan meant to keep the government funded through March of next year and avoid a partial shutdown this weekend. But then, Elon Musk and President-elect Trump decided to derail it. It all started when Musk took to social media, urging Republican House members to reject the plan that Speaker Mike Johnson had negotiated with Democrats. Musk didn't stop there. He issued a not-so-subtle threat: any Republican who votes in favor of this deal will face a primary challenger in 2 years, and Musk would personally fund their opponents. Talk about pressure. Shortly after Musk's post, Trump's vice president-elect, J.D. Vance, chimed in on X, formerly Twitter, echoing Musk's stance. He insisted Republicans should pass a lean and clean spending bill, one that excludes Democratic priorities, and demanded a higher debt ceiling. GOP fallout. This didn't sit well with everyone in the GOP. Representative Mike Rogers, chair of the House Armed Services Committee, publicly dismissed Musk and Trump's interference, saying, "I don't know what they're talking about." Even Speaker Johnson admitted Musk had texted him, criticizing parts of the plan. Johnson explained that bipartisan support was necessary to pass the bill, but Musk was adamant, no deal. Trump UPS the ante. Fast forward to today, and Trump is raising the stakes. Yesterday, his camp demanded two things: stripping out Democratic add-ons and raising the debt ceiling. Today, he's taken it further, calling for the complete elimination of the debt ceiling altogether. Basically, he wants no limit on government spending, a bold move that's throwing even more uncertainty into the mix. Now, here's the kicker: the clock is ticking. The current spending bill needs to pass the House by midnight Friday, get to Biden's desk, and be signed into law to avoid a shutdown. But with Trump's escalating demands and a divided Congress, the odds aren't looking great. Many analysts predict a government shutdown is highly likely. What's at stake? This isn't just about political drama, it's about real-world consequences. For investors, this kind of turmoil creates a swirl of uncertainty. How long will the standoff last? What's the final resolution going to look like? These are big questions that require patience to answer. One more thing worth noting: tucked into this spending bill is a provision that limits U.S. investments in China, a clear move by the Biden administration to tighten its stance on Beijing. But Trump wants that stripped out too. Why? Is it a strategic play to soften relations with China or just a bargaining chip for future negotiations? That part remains a mystery. For now, the situation is fluid, and markets and voters are watching closely to see how this high-stakes showdown ends. Stay tuned. Thirdly, Russian President Vladimir Putin is making headlines again, and this time, it's during his marathon Q&A session on state television, a yearly event that seems to go on forever. Today, the focus of international media is on two key topics: his stance on the war in Ukraine and his outlook on working with President-elect Donald Trump. Reuters report, Putin signals willingness to negotiate. According to Reuters, Putin stated on Thursday that he's open to making some concessions on Ukraine as part of potential talks with Trump to end the ongoing war. He also said he's willing to begin negotiations with Ukraine without preconditions. During the televised event, Putin told an American news channel reporter that he hasn't spoken with Trump in years, but is ready to meet him. When asked what he could offer Trump in such talks, Putin rejected any notion that Russia is negotiating from a position of weakness. He emphasized that since ordering troops into Ukraine in 2022, Russia has become stronger, not weaker. Putin's non-negotiable terms. While Putin expressed readiness to negotiate, he reiterated two firm conditions. 1. Russia's territorial gains are non-negotiable. The areas occupied by Russia in Ukraine are off the table for discussion. 2. Ukraine cannot join NATO. He made it clear that this remains a red line. Reading between the lines. So, what does this all mean? On one hand, Putin's comments might be an olive branch aimed at Trump, signaling a willingness to strike a deal. On the other hand, his non-negotiables set a clear baseline for any future talks, one that Ukraine is unlikely to accept. From a broader perspective, it's a calculated move. Putin may be positioning himself as open to diplomacy while still holding firm on core issues, appealing to Trump's negotiation style while keeping the pressure on Ukraine and its allies. What do you think? Are these signs of genuine compromise or just more posturing from Putin? Either way, his remarks will undoubtedly add a new layer of complexity to the ongoing geopolitical chessboard. Finally today, we're diving into two fascinating stories about Elon Musk and his growing involvement in British politics. Story 1: Musk's historic donation plan. British media has been buzzing with reports about a potential blockbuster political move by Musk. According to The Telegraph, Musk is allegedly planning the largest ever donation in UK political history to support the Reform UK party, formerly led by Brexit campaigner Nigel Farage. Recently, Musk and Farage had a meeting at Trump's Mar-a-Lago estate, sparking rumours. Farage confirmed they discussed funding but denied the reported $100 million figure, saying, "We talked about the idea, but no specific amount." Why is this gaining so much attention? Musk's financial support and influence played a significant role in Trump's recent victory, at least according to his allies and fans. Musk has openly admitted his impact, and he's been flexing his political muscle ever since, threatening GOP lawmakers who don't align with him by vowing to fund their challenges in future elections. Now, Musk seems eager to replicate this strategy in the UK. On his social media platform, X, Musk has openly expressed support for Farage and even hinted at backing Farage's ambition to become the UK's Prime Minister. The plan? Help Reform UK, formerly the Brexit Party, break through the dominance of the Conservative and Labour parties to become one of the top two political forces in the country. While some in the UK welcome Musk's involvement, others are deeply critical, viewing it as foreign interference in British politics. Story 2: UK pushback against Musk. In response to Musk's political ambitions, the UK government is now exploring ways to curb his influence. Today, Bloomberg reported that British authorities are considering imposing donation caps to limit Musk's financial support for Farage and his party. Currently, UK laws prevent foreign individuals and companies from making political donations. However, Musk has found a potential workaround, using Excess UK subsidiary to funnel funds. Since this subsidiary is legally considered a British company, Musk might be able to donate through it. This loophole has alarmed British lawmakers. Prime Minister Keir Starmer and the Election Commission are reportedly working on legislation to tie donation limits to a company's financial capacity. For example, Excess UK branch has a net profit of only £8.6 million, far below the rumoured $100 million donation Musk is planning. But closing this loophole isn't straightforward. Laws targeting Musk could unintentionally impact other UK businesses, making this a tricky balance for lawmakers. Bloomberg notes that while Starmer's team is eager to act, the path forward is fraught with legal and political challenges. What does this mean? These two stories reveal Musk's growing ambitions to shape global politics beyond the US. His interest in the UK's political scene underscores his desire to wield influence on an international scale. Whether this will succeed, or face insurmountable legal and public resistance, remains to be seen. What do you think? Is this a savvy move by Musk or overreach into foreign politics? Either way, it's a fascinating development that we'll be keeping an eye on. That's all for today. Thanks so much for watching. If you found this video helpful, don't forget to hit the like button and subscribe for more updates. I look forward to seeing you in the next one.